And now to share her insights about the local market outlook, let's welcome to the stage COL Chief Equity Strategist, Ms. April Lynn.
Hey, good morning, everyone. Thank you for attending COL Financial's Investor Summit. So I am here to talk about our market outlook, and I just want to say that, what a difference 2 months makes. So 2 months ago, when I was talking to you, we were just saying actually that we are in a bull market. And, just want to say that domestically, nothing has changed. The factors that brought about the bull market are still intact. As you can see, inflation continues to go down with the August inflation at a very low level of 1.7%, thanks to lower food and oil prices. And because of that, you can see how the 10-year bond rate in the Philippines has actually gone down quite significantly. It's 4.8%. In fact, it's lower than where it was during the start of 2018 before it climbed all the way to 8%. Okay, so our central bank continues to ease interest rates. Since we last spoke, it has actually reduced rates by a total of 50 basis points or twice. And last night, they actually announced another triple R cut or reserve requirement ratio reduction of 100 basis points. So that's very good. That means even lower rates going forward. Okay, and as far as we are concerned, in July, we said we are very positive about the second half because it looks like our GDP growth will accelerate. And there are already indicators pointing to that. First indicator would be government spending. So we looked for the July and August spending. As you can see, government spending from negative growth during the first half is now up for the months of both July and August. Okay, and consumer confidence, as you can see, from very negative levels because of higher inflation, higher prices, it has actually returned to positive territory. Meaning the animal spirits have returned in our consumers. They have become very positive. And one of the things they highlighted is more jobs and higher income expectations. So very positive for GDP growth. Aside from that, business confidence. Okay, for those of you who are reading newspapers, I'm sure you will say, why did we use next quarter rather than current quarter expectations? Kasi yung current quarter, they compare it to the previous quarter. And one of the factors they highlight on a quarter-on-quarter basis is seasonal factors like rainy season, harvest, because of course, third quarter is not a harvest season, which is why we use the fourth quarter. And if you look at it versus historical, it is in a much higher level. No? And one of the things that were highlighted, of course, is easier monetary policy, higher government spending, more positive outlook in general. And I think another factor that we would like to highlight is lower bank lending rates. So now, if you have a business and you want to borrow money, it is cheaper again. It has come back close to 2018 levels, and with the triple R cut, most likely it will go down further. Okay, and I think another thing that I would like to highlight now that I didn't highlight before is bank deposit rates. So during the first half of 2019, I think one of the main competitors of the stock market is time deposits. Because of course our time deposits became so high. A lot of people just opted to place their money in time deposits because it's a safer alternative and of course you get a guaranteed return. But now that is no longer the case. Time deposit rates have gone down, so this is very good for investors of the stock market. So that's the local story. So far so good. Unfortunately, I think what's dragging the market down really is what's going on globally. I've talked about this slide previously. I mean, if I only had a minute to talk about what's going on globally, it's that, economic conditions there are deteriorating substantially. And these two charts would be the, summary of it. First, the PMI, the way you read this is that if it's below 50, it means there is a contraction. And globally, it's at 49, which means that the manufacturing sector globally is deteriorating. And business confidence is very negative, as you can see here. Okay, there's no animal spirits, as you would say. People don't want to spend, no? Businesses don't want to spend. And the main reason is the trade war between US and China continues to deteriorate. So what has happened since we last spoke to you? In August 1, President Trump said that he will be imposing tariffs on the remaining $300 billion worth of imports from China. Of course, later on he said, okay, we'll delay some of it to December 15. Nevertheless, he's still going to push through with tariffs. And in August 23, China, on the other hand, said that, okay, if that's the case, then we will also impose tariffs on US imports. Okay, so that's 75 billion, which is in a way much less. And, this is a chart from IHS Market, which is the group that does the PMI computation. So what they do is they do a survey of businesses and they ask them, why is your outlook so negative? And they highlighted two reasons. First is uncertainty, and second, trade war. And you can see how, they did a historical comparison of how many times in the past have people said uncertainty. And you can see that this time around, the way it has gone up is, out of the charts. So a Z-score essentially is versus normal, how many times more are they doing it? And this time, I think it's like 7 times more or 8 times more than normal. People highlight trade war, and uncertainty. So that's why they're not spending. They don't know what will happen in the future, and you don't want to risk your capital when there is so much uncertainty. So unfortunately, because of that, remember earlier on, we were highlighting how much foreign investors have come back into the Philippines and pushed the market up. Foreign investors are very important to the Philippines because they account for 50 to 60% of our volume. And we thought initially after the MSCI rebalancing in August, they would come back to the country. Unfortunately, they continue to exit. And there is no interest, as you would notice, how our value turnover is very small and very weak. But that said, that has nothing to do with us. They're exiting all emerging markets in Asia. In fact, we're performing better than others. India, if you look at it, it's down only by 2%, pero this is madaya because the India market actually rallied after they announced a reduction in the tax rates. If not for that, this market would have been much lower as well. Okay, and where are all the foreign investors going? They're going to bonds, US dollar sovereign bonds. The chart here on your left is 10-year bond rates in the US. It's now below 2%, and the performance of bonds is inverse to that of the bond rate. So as bond rates go down, bond prices go up. So all the funds are going to bonds right now. It's a safe haven play because they're in a risk-off mode. And another product that they are looking at right now is gold. Okay, so that's where all the money is going because investors are in a risk-off mode. So that said, all in all, okay, before anything, we have on the positive side, global monetary easing. Okay, so again, since we last spoke, the US Fed has reduced rates twice. And remember, during the start of the year, people were thinking they were going to raise rates twice. Now they have cut it twice. The central bank in Europe has also cut rates. from initially thinking that they would finally be raising rates in September. They backtracked and cut. And they've also said they were going to begin with quantitative easing, or they will resume quantitative easing in September. Finally, China has also cut their reserve requirement ratio, and they've reduced the prime loan rate by a total of 11 basis points. So globally, central banks are easing their monetary policy, which is the only silver lining globally. Okay, that said, in summary, should we be bearish in the Philippines? After much thought, at the end of the day, valuations is very important. Is it priced in? Our feeling is, I think the negatives are kind of priced in. Again, this is the PE band of our index, and as you can see, it is at the lower end of the range at -1 standard deviation. So we're now trading at 15.8 times PE. Okay, so just to refresh your memory of standard deviations, if something is trading at 1 standard deviation below the mean, it just means that during the past 5 years, the index was trading at a higher valuation 86% of the time. Okay, so right now, the probabilities are in your favor. Okay, it just means that I think we're trading at parang bear market valuations na, no? Very cheap because people are really very pessimistic. And for those of you who are skeptics, I think this is a more convincing chart because we did a PE analysis of each and every index stock. And as you can see, the way you read this is if the yellow bar is above 0, it means that these stocks are trading at a premium relative to their 10-year historical average. Kasi I know the skeptics here will say, madaya yung 5 years, dapat 10 years gamitin nyo kasi yun ang tama. Okay, we use 10 years and we got each and every index component. And as you can see, only a handful of them are trading above. Most of them are trading at a discount relative to their historical average. So that said, it's very difficult to be bearish at this point in time. Okay. So anyway, I will not have time to talk about my stock picks, but anyway, for those of you who do not know, every month I come out with our Calling the Shots report, and there we talk about our ideas about the market and which stocks we like. So, later on, I'll have a chance to talk again, and I'll be talking about some of these stock picks as to why I like them. But anyway, for now, I'm just showing to you a summary of the stocks that I like. These are fundamental stock picks, and we will discuss them later. Okay, so in summary, the Philippine economic outlook remains very positive. Inflation continues to go down, interest rates go down, and our GDP growth outlook for the second half of the year is very good. Indicators show that it will accelerate compared to the first half. However, global economic outlook is deteriorating further, brought about by the worsening trade tension between US and China. Central banks are loosening their monetary policies, although it remains uncertain if it's enough to address global growth concerns. Okay? Because of the poor economic conditions globally, foreign fund managers are selling emerging market equities regardless of fundamentals and are buying safe haven instruments such as US government bonds and gold. Nevertheless, we don't think it still makes sense to be bearish at this point in time. Aside from the Philippines' attractive economic outlook, valuations of local stocks are very cheap, even compared to their historical averages. However, to reduce risk, given the heightened volatility, we continue to advise investors to manage size, invest only long-term money, and focus on attractively valued stocks. So I think at this point, when I just like to emphasize the meaning of managing size and investing long-term money. This just means that it's not a particular amount that we're talking about. It's more like you have to be honest with yourself and ask yourself, are you going to need this money in the next year or two to pay for something? This has to be money that you should be willing or that you are willing and can afford to sit on for a longer period of time. And that is different for each person because bear markets, or not even bear markets, but weak markets such as these create opportunities to make a lot of money. But then again, you don't want to be emotional about it such that you will be forced to sell at a very low price and miss that opportunity to make money because you became emotional. So with that, I'd like to end my presentation and thank you very much for attending our Investor Summit.